All right, welcome to the Closing Beat, everybody. Happy Thursday. Hope you're having a great day out there. Welcome to our quick show we call the Closing Beat. It's not stock market. It's Closing Beat. Just a quick show we do covering the stock market there. We also have a class coming up tonight for our customers. We'll be talking about the high interest checking and savings accounts. For those of you that are interested in them, we're calling them Jazz Cash. So if you want to check it out, we'll go over all those details tonight for you. Every week we do a class for customers, and most of the time it's focused on sort of education. You can actually see the classes if you like. You go to our website, click on events up at the top, and you can see what classes are coming up. We try to cover a little bit of everything just depending on what people want us to work on. I love to talk about stuff, so we do that as an ongoing basis every Thursday for our customers, teach them a little bit something new about their dough, their investments, or personal finances maybe, if that helps you there. We also are playing a game called Guess the Dow. We'll announce the winner tomorrow to see who was the closest without going over. If you want to play, just go to jazzwealth.com/guess the Dow. You just take a guess, right? Wherever you think it's going there. It's not like a marketing thing or anything. If you're the closest without going over, we will send you a $100 gift card. And if you're one of our customers, we will credit your account if you prefer to have that as well. It doesn't affect your Roth IRAs or IRA contribution amounts or anything. We'll just credit your account $100. Anyways, let's get started in the markets today. You got the Dow lower by 28, S&P higher by 5, NASDAQ added 66. Bit of a disconnect there again, and that's because of earnings season. We're still in the thick of earnings season. Let's take a look here at the charts. You got the S&P 500 not really doing anything since the bulk of earnings season started. We've been sort of chopping around near highs. Most people aren't complaining because we're sitting near highs. However, all the technical traders are looking at this prior high here saying, okay, we've had some troubles here. We fell 7% last time. We fell 6% the time before that. What's going to happen this time? Are we going to break through it and move on, or are we going to pull back again? If we do pull back again, a lot of people think that's the top. That'll be it. You don't normally knock your head up against a ceiling 3 times and then somehow break out later. Usually that's the beginning of a pullback there. So a pretty important area overall in the stock market. We'll be watching here, of course. Earnings season's got things a little bit jumbled up at the moment. We're about halfway through as far as the S&P is concerned. Today was the busiest day for the S&P 500. You've got 75% of the names in the S&P 500, 75% of the companies that have reported have beat on earnings, 63% on revenue. The average gain, if you happen to play every single one of those stocks, the average gap up the following day was 0.6%. What does that tell you? Anything interesting there? What it tells you is if you happen to own a lot of those stocks in a portfolio or however funds or whatever you've built, you really haven't seen much change there. So it hasn't been one of those earnings season where the majority of stocks blast off or the majority of them just crush and crater and it's just scary and everything. Average gain 0.6%. So not really anything to be excited about there. Dillo Research, of the 385 names in total that have reported so far, only 21 of the names have beat on earnings, beat on revenue, and raised their guidance. So 21 out of 385 just blew away earnings and everything was good there. Not all of them actually were positive the next day, but not really good so far in my opinion. But we'll see. We still got a lot of earnings to go there. We've had a lot of earnings report. Also, you've got the Fed watch here. So the Fed... Is that next week? Fed expected to cut rates next week. Goldman Sachs actually put out a note to their high net worth customers today. We get all that stuff, so we track it for our customers and stuff. They put out a note saying, listen, this is what the Fed's going to do. They were very blunt about what was going to happen. 25 basis point cut, and that Mr. Jerome Powell was going to say, that's it for the candy. You guys cannot have any more candy, no more rate cuts. That's how they pitch it, to be honest with you, is that you're getting the opportunity to go borrow at low cost. But really, on the flip side of that is, they don't want you to save money. You notice how all the high interest checking, savings, all that stuff, it's all started creeping down, and you go, oh man, I'm not making any money on my money. That's the point. They want you to go spend your money. They don't want you to save your money. They want you to go out. They want you to spend the money, buy great stuff for Christmas or whatever holiday you celebrate, go buy new cars and things like that, whether you want to pay cash or get loans. They're trying to get you to waste your savings there. So you got to fight through this a little bit if that's something that has bugged you there. Anyways, we'll find out next week what they do. Goldman Sachs says 95% chance that they're going to cut rates, and pretty much every trader out there expects the same thing as far as the bond traders that are currently trading that at the moment. So we'll see. We'll take a look and, of course, cover it when it happens there. Anyways, that's the S&P 500 there. You've got the NASDAQ a little bit higher, still butting its head up against the resistance area there. I pointed out yesterday everybody's pretty much happy that we're above this known resistance area, and so far it's acting like support. So for the NASDAQ traders, all is good there. The Dow's got a little bit more work to go, but it's also had the bigger names report their earnings between 2 days ago, yesterday, and today. And so that's pretty much all done. The Dow can sort of get back to normal now. See what happens going forward there. If we look at some of the individual sectors today, semiconductors did well, up about 2.5% on the day. Handful of names reported earnings there. You got AMAT, real strong day for AMAT, up to new highs there, about 9% on the day. KLA 10 Core, CLAC is the symbol, KLAC, up to new highs as well. Lam Research, LRCX is the ticker symbol, up 14% on that one. These are all earnings. Lam Research beat on earnings, raised guidance. AMAT beat on earnings, everything looked good there. Xilinx also reported earnings. Where'd they land there? Down a little bit, so kind of quiet there. One of the underperformers in the area. But all in all, semiconductors looking pretty good today. We're going to need the tech stocks. There you go. You could look really at any ETF you like or any sector, however you want to pull it up. We're going to need the tech stocks and we're going to need financials to break above this high if we're going to see the markets get above highs. Tech and financials are the largest components of the overall S&P 500. So if you ever want to know where the S&P 500 is going, take a look at those two areas. If they're not working in unison, then the market is sort of like doesn't know what to do, kind of like today. So small gain on the day there because of that. So we'll see what happens there going forward. Of course, we're going to keep an eye on it. Look at a few other areas here. Gold was higher by about 0.75% today, trying to move out of a little bit of a sloppy range. It's been quiet. I haven't mentioned it here in the last couple days. If you want to look at the price of gold futures directly just to see what's going on, over the last 8 trading days, maybe 9 trading days, nothing, right? You had no reason to believe it was going to bounce or continue to head lower. So a decent day for gold in general. Oh boy, what'd I do? Yep, there we go. Consumer staples moving back towards highs as well. That's sort of coiled up. I mentioned this last week saying how a lot of sectors are sort of coiled up, whether it's in a tight range or in a wide range. You've got this coiling going on here. Consumer staples got a little bit of a wake up today, about 0.33%, hinting at maybe moving out of this range and continuing the uptrend. So if you're playing that category, maybe your patience is about to pay off. Transports, we talked about that good move up off the lows, bouncing from the 10% support area, almost back to highs, well, recent highs. Being a little bit overextended and just sort of suggesting yesterday, it'd be okay if this took a break. I mentioned that on a few sectors where it just, a little bit overrun in the short term, overbought as people would say, and maybe if it pulled back wouldn't be the end of the world. The key to that would be a nice calm pullback on lighter volume, not like what you saw before. The pullbacks on heavier volume indicating a lot of selling. You can see the same thing happening over here as well. You kind of want to just almost see it go sideways. Best case scenario, it goes sideways, but so far taking a break as expected. Along with a couple other areas, we talked about the regional banks yesterday, up at these highs, a known resistance area. You can see it in real time. Go back to yesterday, we were talking about that trouble right there, the ceiling overhead. Today, traders responding to that saying, no, I'm not going to be the first to dive in at a known resistance area. So anything above that high on a closing basis, you'd expect to see that sector take off. And that's good. We do need the financials, whether they're regionals or the big ones. Well, you need the big ones, but it helps to have the regionals as well. So all looking good there. Just a little bit of a pause today. Healthcare, same thing. It's had a great run. It's been one of the overperforming sectors over the last week and 2 or 3 days or so. And so for that to take a break, totally understandable. No problems there. Bonds are quiet, waiting on the Fed there. We've got really no indication of any major rate changes. Although we all expect them to cut rates, bonds are pretty much quiet. I'm using the TLT to track that if you like. You can look directly at the overall 30-year if you want. Same thing, nice and quiet. And if we look down at the short-term 10-year, also quiet, just basically waiting on the Fed news. Unless there's any other kind of geopolitical news, which today the ECB, or overnight, the ECB said that they were going to leave their rates the same, and they decided to leave the rates unchanged. That didn't really give us any guidance going forward there. It made no comments or anything to kind of help us out. What else? Home builders, a little bit higher here today, just slightly higher. New home sales were pretty good, up 15%. Didn't really do much there. If you look directly at home builders, same thing. This is the ITB. This is home construction, which would be a more organic way to play the home builders if you like the ETFs there. The XHB includes things that relate to new home sales as well. So you'll see Home Depot in there and things like that. I like the XHB just because it encompasses more of the overall portion of the economy. But up to you. So either way, those did really, they did okay today. Not too bad. Let's talk about individual stocks. You got a lot of them today. They're all going to basically be earnings related, everything that I talk about. You got Southwest Airlines, great day, up almost 6% on the day. They beat on earnings, beat on revenue. They said they've been able to charge higher fares. They've had higher demand. All looks good there, despite them having, 40-something 737 MAXs still sitting on the ground. I think it's 60, actually, 61 or so. The CEO was on Bloomberg, or no, he was on CNBC. I don't know. I watch them all. I think he was on CNBC and basically said, look, we're going to have to take a look at the Airbus, see if we can get some Airbuses in here if this thing continues. So was he just jawboning like as the Fed does, like trying to just make a better deal with Boeing, or was he really serious about it? But he basically said himself and the board, they were going to have to do whatever they had to do, and they were pretty upset about it. But earnings did well there. Passenger per available seat mile, which is the metric that most people like to look at in airlines, so that always gets attention. That was up 4.2% to 14.32 cents. So the revenue per available seat mile that's flown, they make 14.32 cents. Sounds low, doesn't it? I don't know. Sounds low. So when you look at something like that, then you want to know, okay, well, if you had more revenue per available seat mile, what was the cost for that seat mile? So that you really want to get geeky in this and kind of dive in. That's something that they look at as well. So revenue per available seat mile was higher, but the cost per seat mile was higher as well, up by about 7.5%. So a little bit of a mixed bag there. Not bad, but not really amazing. If we look at American Airlines, you want to see the same sort of story there, because the airlines got a chance to really stick out today. High volume there on American Airlines, up 4%. It's an underperformer because they're still working out that, they're negotiating with the mechanics union. You've heard that in the news where they were having some slowdowns there and the mechanics are sort of playing games while they work through it. However, they both agreed that they're not going to negotiate publicly, so we don't really get any updates during the earnings like you normally would through a normal company that's negotiating with a union of some kind. These guys are they're agreed to be quiet. But American Airlines beat on earnings, beat on revenue. They also published, where was it? They just said that? The total cost so far for them not having those 737 MAXs in the air. They put a number out there. Oh, $540 million is what it's cost them so far. But despite that, the revenue per available seat mile, was up 3%, 14.5 cents on that one. And the cost per available seat mile was only up 5%. So a little bit better there for them. And that's pretty much it. No real comments there on the mechanics union thing. So American Airlines still, you got an unsure stock over there relative to some of the others. And that showed today as well. 3M was the biggest loser in the Dow. It was by far the biggest loser in the Dow, down 4% on the day. They reported earnings. They missed on revenue, beat on earnings, missed on revenue. They also cut their guidance going forward. People don't like to see that. So a little bit lower there. They blamed the weakening demand in China. That was their focus there as far as 3M goes. So that was a big drag on the Dow, and that was basically 50 plus points on the Dow because of what happened there on 3M today, which totally offset Microsoft, because Microsoft had earnings as well. They were up 2% on the day. Beat on earnings, beat on revenue. Their cloud services business, slight downtick. I believe it was less than 1%, but that maybe put the lid on the performance today for this not breaking out to new highs, because we've seen growth in the cloud space there, but it just wasn't like off the charts. So everybody was like, I don't know. Should I buy this thing now, or should I just wait till it breaks out and see what happens? So that's that one. We got plenty more for you. Tesla, almost, 17.5% today. Was up almost 20% at one point, above the $300 mark. That's the first time since March we've been above the $300 mark. Didn't close above there, but we'll call it close enough. Basically 300 on the day, 299.68. Beat on earnings. They showed a profit. That was amazing. Focus was on cash flow, or free cash flow. Came in $300 million higher. Now, that would normally be really exciting, and it was. People were very excited about that, and also the fact that they made a profit, right? Just hopefully this continues for them and they can continue to make a profit. But they do have a lot going on around the world. So the Model Y production at that Gigafactory in Shanghai, so that is now ahead of schedule. They were pushing for the end of next year. They're going to push it up to the summer of next year to start producing the Model Y over there in China. Interestingly, they said profit margins will be basically the same as in the U.S., so it should be really easy to model once they start rolling some cars off of there and see the demand and deliveries and everything there. Also, they're working on a new, cheaper SUV. That's supposed to be launched next year as well. Well, when you start hearing things like that, you go, okay, it's a good thing you have the extra cash, right? Because you're probably going to need the cash to do all that, right? So good news all around for Tesla. They got the money to keep expanding, doing what they want to do, and all kinds of cool comments. I mean, you got to love watching Elon Musk. Comments about, I think he said next year they were going to have autonomous taxis, like they were going to try to be ahead of everybody else. So pretty cool what he throws out there. He's definitely a long-term visionary, so you don't really expect him to come flying out with these things overnight, but it's cool stuff if he can have his way. PayPal, nice gap higher there. I just point this one out because you guys, I know some of you had PayPal or you want to participate in PayPal. You would anticipate, and I'll tell you, technical traders will anticipate that that's your low for the short term, that the low has been put in for this particular stock based on this reversal. Why? Serious reversal. It did not just recover 1 day of losses, it covered a week's worth of losses and really big losses, to a matter of fact. So over 8% losses recovered in 1 day. That attracts not only people to come dive in and buy the stock and say, okay, I'm going to take my chance. This is my stop. It's sort of large at the moment, but I'm going to use that. And it also convinces the short traders to say, I'm out. Right? I played this to the downside, whether they made a profit or not. It sort of forces them to get out of a short position. And how do you get out of a short position? You got to buy it back. So it's twice as much buying as you're used to seeing there. So if you're not familiar with that, maybe a good time to study up on some of that. That was definitely some short covering today because the volume was, I believe, 6 times above average. If you happen to pay attention to that. So crazy day for PayPal. PayPal also beat on earnings, and their guidance was the main focus. So they had a range of guidance, and they guided towards the higher end of that range, which is always good there. Microsoft guided towards the lower end, if that helps you. 66% of the stocks in the S&P are above the 50-day moving average. We officially now have every sector in the S&P has at least 50% of their stocks in that sector above the 50-day moving average. But like I said, we're going to need the financials, and we're going to need the tech stocks to show us some strength, which they're working on it, right, to break out over that. If you look at the tech sector, however you want to look at it, you look at the tech sector, look at every stock inside of there, only 55% of the tech stocks are above their 50-day. Now, you could look at that as bearish or bullish. It's up to you, right? Glass half empty, half full. It either tells you that you've got a lot of discounted names that may see value investors come along and try to play for the tech space, which in turn would boost that whole sector. It'd be very helpful. Or you could look at that and say, we've got a weakening tech sector that is the second weakest sector in terms of stocks over their 50-day moving average. You could look at that and say, I don't know. That means maybe we're going to struggle to break out to these highs, or it could be a weaker breakout that entices some selling pressure there. So good news is we're going to find out soon, so you don't have to guess for very much longer. All right, here we go. You got 26 stocks making new 52-week highs, Apple being one of them, starting to seem a little bit tired there at highs. You can't blame it. It's had a great run there. Maybe it's just trying to take a little bit of a break. It was a very, very small positive day today. In the oil space, you had some of those relative strength stocks. Remember we talked about the weak oil space. Where does the new money go? If you have a weak sector, what stocks do you want to buy if you're thinking about buying a weak sector? Well, you look at stocks that have already bottomed and are showing leadership in terms of headed to the upside. Well, Phillips 66 is one of those stocks, so that hit new highs today. And Valero is another one, although extended, I would argue, in the short term. These are leaders. There's some of your relative strength oil stocks that hit new highs today. Pulte Homes hit new highs. I was flat out wrong on this one. I'll just be honest with you, right? For me, I would have thought this was overdone on earnings day, but it's still continuing. Another 3% today. I'll admit when I'm wrong. That's a very strong stock right now. Problem is, it's now really extended. Can you chase it here? I wouldn't. I can't say that I have the guts to do it. But bottom line is, I was wrong on that one, pulling back. So just let's play fair. You know what I mean? Procter & Gamble hit new highs today. We happen to own it, so that's a good thing for us there. Happy to see that one on there. And O'Reilly Automotive had earnings as well. Great earnings, which is awesome. We own this stock as well. And it broke out over all of this entire range. So the way I looked at O'Reilly for a while was dead money. Right? You look at this going sideways for month after month and you go, give me something better. Let's add something better to the portfolio. Don't have to now. It's looking really good, almost a 10% gain on the day. And one more, Raytheon hit new highs as well. We also happen to own this one. I'll let you guess which fund we own this one in, but hit new highs, looking good, about 4% there as well. And Raytheon was earnings. They beat on earnings. They beat by 24 cents. It was a great beat there. That was the one I was thinking of earlier. We're expecting 284. We got 308 in terms of earnings. Revenue was better than expected, and they raised their guidance. This is one of the 21 that have sort of beat on all metrics right there. So looking good in the short term. All right. On the downside, you got CBS down 2% on the day, and Viacom as well. Yeah, that was the other one. Viacom down 2%. We don't own these. Thankfully, I don't have to tell you we own these stocks. But I also don't follow them very much, so I don't have much to offer there. And I think it was Allied Data. Yep, there it is. Allied Data, symbol ADS if you're looking, broke to new lows as well there on earnings. So pretty weak day for them. We don't own any of those, and I try to add some color to some of this stuff. I don't follow these stocks, so not much I can do there for you. Some stats plays, here you go. You got LHX, late day coming in, hitting the target there. So this was one we said 75% of the time it's higher by at least 2.58% in the next 5 days. Today is day number 4. It officially hit that number there. I would not have guessed that that would have happened, but I guess odds are odds. You got to roll with them there. So we'll take that off the list. Great finish to the day on L3. CVS was the other one. Oh, we took that off the list. This one officially hit the target as well. It was a little lower today. But that one's done, so that's old news there. All right, I got one for you. You ready? Look, I just share the stats. I'm not telling you what to do. I just share the stats with you. Here's one. Travelers Insurance. Take with it what you want. Travelers Insurance, when it finds itself as extended as it is now, if you look back over the entire lifespan of this company and every time it finds itself exactly as extended as it is now, 100% of the time, it's up 2.8% on average in the next 5 days. I don't make a habit of saying 100% of the time, but that's the data. That's not my opinion. I'm just sharing the data with you. I found that to be pretty interesting. The other one was Adobe. But Adobe really already started late day today, so I'm not going to share that one with you. But Travelers, 100% of the time up 2.8, basically 3% in the next 5 days. I'm just curious to see what happens here, because you've got to go from right here. Oops. You got to basically, look at the move you got to make here. 2.86 puts it about 135.41. So if I go over here, I'll just get it as close. Yeah, right on the dot, actually. So that's where it's supposedly going to go in the next 5 days. Today is day number 1. We'll see what happens. Not often you see that kind of stat there. HCP, by the way, this will be on the downside. I know some of you like the downside plays as well. 61.5% of the time it's down 1.15% in the next 5 days. That's going to put it not very far. That's just saying it's a little bit extended here. Call it 37.15. So if I go like this, that's the expected move over the next 5 days. It's not much, but again, I pointed out earlier in the week, there's just not much in terms of big, juicy moves right now, statistically. So that's that one. And those are our stats plays for today. Did you happen to see Twitter? Twitter lived up to the stats, by the way, and then some, if I could say so. Twitter is the second most volatile stock on earnings. I pointed this out last week or earlier this week, saying Netflix and Twitter, oh my gosh, these are the most volatile names in the S&P. And so now at least you know, right? And the goal is not to try to share something and have you go, wow, he's amazing. I can't believe he guessed that. I didn't guess, right? The goal is to say, know where you should have your alarms on, right? Where should you be like nervous that something could happen? And with Twitter and Netflix, those are the two names. Chipotle, I would argue, we were in there as well. Amazon as well. Anyways, Twitter came out with earnings down to basically $31 there on earnings. Really nasty move there. Comcast also lived up to its stats, although it finished negative on the day. We said yesterday this is the earnings stock today that had the highest probability of opening higher today, and it did open higher today, but it faded really quickly. There's a lot of uncertainty in this category right now between all these names, as you saw with like CBS and Viacom and stuff. I know there's something different going on there, but a lot of uncertainty in these names, trying to digest the data behind the streaming wars and what's going to happen, and Comcast competing with Roku and how successful they'll be and everything. Anyways, the point being, the stats lived up to their name. It did gap higher, but it gapped up more than the average gap. 63% of the time it gaps higher by at least 1.22%. That one's done. We can move on. I just like seeing what happens here. Okay, a couple others, and I'll take your questions there. You got Beyond Meats. You can't see it. Beyond Meats bounced back a little bit. I know I gave it a bit of a hard time yesterday, but the $100 level breaking through today, people saying, all right, still good enough. I want to take my chances. So you got at least a little buying there, and decent volume, by the way. Remember, lockup period next Tuesday, and I believe earnings on the same day or the day after. So Careful there. You're playing with fire again. Amazon misses on earnings. I didn't catch all of this here, so we'll cover this maybe tomorrow. But the point is they missed on earnings. The stock is down about 7%, 1658-ish, right around here. So breaking down to new lows. It's going to be a nasty day for Amazon tomorrow. You can already see the NASDAQ starting to respond a little bit. I didn't catch much of the details there, but there you go. Amazon with a sharp move lower after hours. And then Intel, one of your semiconductor names, this is kind of interesting because this is, at the moment, it's going to gap above your little rising sort of sloppy range here, right? So you got this thing making higher lows and sort of lower highs. So you get this, a lot of people call them a wedge. It's not perfect. It's just kind of a normal looking thing there. But the point is you can see what is known resistance, right? Well, anyways, they report earnings. They beat on earnings. They raised their guidance. And so at the moment, I believe it is still gapping above those highs. You got 53.92. It's going to be just above, right about there, as far as the gap up tomorrow. Anything above the 53 number should be pretty positive for Intel going into tomorrow. It was up 1% today before it hit earnings there, so looking pretty good. And what else do we have? I think I covered most of it, at least. You got Ben Franklin reporting tomorrow, Anheuser, Ambev, Budweiser. Let's just call it Budweiser. Goodyear Tire reporting, and then sort of a quiet day, Verizon and Weyerhaeuser reporting earnings tomorrow. Verizon is kind of a snoozer in terms of earnings, but we'll see what happens there. Yep, that's it. If you have any questions, I'm happy to try to answer you there. We'll see what we can do, and we'll get ready for our class later tonight. Cloud-based tech stocks go down 5%, then up 5% the next day. Yeah, well, you got the big names reporting. You got cloud space business in terms of Microsoft out there. And so, you know, you got earnings volatility. Got to know when these earnings days are coming up. Now, thankfully, this is the bulk of it. This is like the thick part of the earnings there. So we'll see. Is Pulte Homes ever going to pull back? Yeah, right. I mean, you would think after a day, sort of a blow off top, the biggest range day over the last few days, or one of the biggest range days there, being the most extended it's been there. I didn't have a chance to run back and see what the stats are when it's this extended, but yeah, very, very impressive in terms of that move there. I would agree. Yep. Does anybody like Twitter? Like, do you like the idea of buying a 20% discount all in one day? Yeah, you know where I stand on it, but that's crazy. You wanted to vote for us to keep telling you the earnings stats and stock moves like, oh, okay. Well, it's a good thing I like focusing on that stuff, so I'm happy to help. Thoughts on Chipotle? Yeah, decent earnings and everything, but that breakdown shows you more exhaustion, right? Not that it's a bad stock or anything, just exhaustion in the midterm here. All year, it's been straight up, and so it'd be normal for this to take a break, especially if the markets took a little bit of a break as well. So I don't think it's time to say Chipotle is a bad stock or anything. It's just a little tired. Yeah. There you go. Thoughts on, I can never say the name of this, it's just symbol SID. So I'm looking at SID. I cannot pronounce that. I always laugh when I see that. I just can't do it. In the short term, very much weak. It's not one that you'd want to say, hey, let me pick the bottom of this thing. There's no good reason to assume you can pick the bottom of this lower price stock here. So if you own it, I would not be excited. If you're trying to find a way to buy it, goes on a watch list. Check it once every 3 or 4 days. There is no need to watch this stock every day. So we'll see. Yep. Thoughts on a potential upside for Bank of America? I like the financials. I mean, we know we need them to make the markets move higher. JP Morgan's done a great job now. Here, let's see if we can show you. JP Morgan's done a great job moving higher here, hitting new 52-week highs almost every day. So this, you want to think of it like this. You've got the XLF, or the...
Hey, wait, before
sorry.
you go...
What did I do? What did I do? All is good? Okay, so you got the XLF back at highs here, but do you expect it to blast off from here? Or do you expect it to take a little bit of a break and then blast off? Well, to look a little bit further, you would go to names like JP Morgan, Bank of America, and say, well, look, JP Morgan's had a great run. If JP Morgan blasts off and the sector breaks out, you wouldn't expect it to be really long-lived, right? Same with Bank of America. What a great move there. It's already at new highs, doing a great job, but it is extended in the short term, so you can't assume that there's going to be a magical amplification of the move that just happened there. So while I like those, I think there's room for better entry, if I'm even allowed to say that. Yep. Just buy silver. Why some performance percentage is greatly less after taxes? I'm not sure what your question is there. I haven't talked about taxes. Help me out a little bit. Help me out on that one. And you can't see me, so I did mess it up. I'm so bad at that. You have any portfolios based on technicals or hedge against the market? We don't hedge, but we do speed up and slow down portfolios as the time permits. Last September would have been the last time we did that. So it will come up again, but nothing in terms of hedging. Now, if you're a customer and you're like, listen, I'm just scared to death, I need a hedge, and you really got to have one, we can help you out. I would try to offer stats and support so that we're not making an emotional decision, but technically we could, yeah. Yep. Is Libra dead? I don't think it's dead. I think it's the normal process of anything new coming to market. Mr. Zuckerberg got quite a beating the other day. Some of it showboating, some of it legitimate concern. But I think one of his best answers was, something along the lines of, we realize that there may be a lack of trust to Facebook, right? And it's up to the consumer to decide if they even want to participate. They just want to offer it and see if the consumer wants to participate. If they can't gain your trust, you just won't participate. And that was the pitch they were trying to make. That's true about any business. If you can't gain the trust of somebody, it doesn't really matter if it's highly regulated or allowed or not allowed. People just won't use it, right? Look at Wells Fargo. Wells Fargo lost the trust of everybody for a while. They were not all of a sudden not allowed to be a bank, right? They weren't allowed to take new investments, by the way. I don't know if that still exists, but they weren't allowed to raise new assets, couldn't take on new customers. But, leave it up to the customer to decide. Yeah. You're surprised Visa didn't move to new highs? That'd be a big move if Visa moved to new highs. It'd be a well above average move for Visa. So you always got to look at that. Like, what is a normal good move for the stock and what is just way above average and normally doesn't happen? You got to know that about the individual stocks you're going to trade if you do. And eventually you do figure that out over time, but we'll see. The money GPS must be keeping you up at night. Is that somebody's name? I don't know what money GPS is. Vanguard compares and shows performance before and after taxes. Why? I don't know. You have to ask them. I'm not sure. Good call on LHX. It's not my call. Don't put that one on me. I'm just reading off stats to you. I'm just reading numbers. That's all I do. Yeah, could be a trust issue. Yep. Tanger's got the right idea. We were just talking about financials being just a touch overextended, some of the tech stocks, some of the semiconductors, so it'd be totally normal for this to pull back. In fact, you would want that. If you were like a diehard bull and you wanted the markets higher, you'd actually not want it to happen for another week or two, preferably a little longer. If you could stretch it out into the Trump and Xi meeting in November, that's not too bad. It's only a few weeks away. You get a chance for everything to catch its breath, earnings season to sort of dwindle down, find some new excitement to the upside there. So we'll see. Cool. Should you be concerned about the Fed and the repo market? Should you? $75 billion a night didn't cover it. They had to bring it up to 120. You know they're going to talk about that next week, but it sounds like a lot to me. I'm just saying. Cool. All right. Well, I'll wrap it up there. I appreciate you watching. If you're one of our customers, I'll see you later. If all goes well, our class tonight will be from the new set. We're calling it the Speakeasy. It's basically an old-style, jazzy-looking bar. So if all goes well, we can get the lights working. We'll see you later for that. For the rest of you, enjoy the rest of your evening. Thank you so much for watching, and we'll see you then.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.